Welcome to 8 Minutes, a podcast about the energy transition where we teach you about everything that's going on in just a few minutes. Today, I am joined by a good friend and mentor, Jon Guerster, who is a partner over at Activate Capital. I'm excited about the conversation today. We're going to dive deep into Climatetech 2.0 and how that really differs from what occurred back in the 2006 to 2011 timeframe, which is typically known as Cleantech 1.0. What are some of the lessons learned? Where are we going with some of the investment and this private capital that's flowing into the market today? So, Jon, really excited to have you as part of the show.
Yeah, glad to be here. Thanks for having me.
Great. Jon, could you start off with maybe an introduction as to yourself and Activate Capital?
Sure. So I'll start with Activate. Activate is a growth stage equity investor in Climatetech. We're in a second fund. It's a $500 million fund. And three partners who started it in 2017 all had come from, we'll talk about Cleantech 1.0 and what it was, but they had all come from careers in investing in the energy transition. And I joined last year coming out of having run and sold Groom Energy to EDF, the French utility. The company that we started was in the energy services space. So I've been with Activate now, actually probably a year and a half now. And what we're trying to find are companies that we think are at this inflection point where they're not early stage, they're not seed and experimentation around technology for Climatech. They have revenues, they have customers, and we like to assess if they have product market fit and they're going after a very large market. That's probably the time for them to be raising growth capital. And typically, those are round sizes of anywhere from $20 to $100 million, plus or minus. So that's where we're focused. And across, Climatech, we'll get into definitions, but we play across energy, mobility, and industrial tech. Those are the three subcategories where we tend to specialize.
Excellent. I appreciate that. And as you kind of alluded to, getting into some of the definitions here, Climatetech seems like it could be embraced across a number of different sectors. You guys have your own definition. How should we be thinking about Climatetech out there in the world?
Well, really, I think the only way to define it is to go to ChatGPT, because that's the new way of defining anything.
You define everything there. This podcast brought to you by ChatGPT.
Might be heading towards that. No, but I think broadly there's a set of things going on that are about both changing the way we operate and both evolving in a way with technology, but applications and implementations that hopefully combat what we know is this massive phenomenon that we're fighting against. And it is the case that, we have subsectors of it, but there are so many categories now where I think the market can understand the climate tech portion of existing market. That's true in food, that's true in mobility, that's true obviously in the energy markets. So each market, I think today, has its own way of interpreting what are technology investment areas that might have climate impact. And, if you reflect back on what it was, we'll get into what Cleantech 1.0 was. That was generally more energy centric. But today it's much more comprehensive. And, the broad things to consider around this particular moment in time is that you have this wonderful collision of what we have never seen before, which is you have awareness, you have capital, you have policy, and you have technology that in many cases is way more mature and way more ready to help address any of these things that are underneath the climate tech category. So I think it's a particularly exciting time, especially for those of us who've been doing it for a long time.
I may add a fifth one in there around commitment as well, because it certainly feels as though there's a broader sense of need to get something done, which is fantastic. So you alluded to it earlier, Jon, around climate tech today versus clean tech yesterday. Can I broaden your definition and ask, what does clean tech mean, and how is that defined? And maybe I'll even start that conversation a little bit, because as we turn back the dial in history a little bit, back to 2006 to 2011 timeframe, there was this massive influx of dollars, private dollars, into the clean tech, what came to be known as Cleantech 1.0 space, right? And by 2008, 30% of all venture capital was going into clean technologies. Fast forward a few years after the recession, after Obama was elected and the American Recovery and Reinvestment Act, the ERA legislation was passed and funneled even more dollars into this space. Then all of a sudden you have this trough. You have a pullback of investment dollars and a pullback of valuations. And we went from about $4.5 billion or so being invested annually into clean tech to something much smaller. Today, Climatetech's much, much bigger. To your point, it encompasses a lot more and encompasses a whole bunch of different sectors to the point where today, just in the US, Climatetech, from a VC perspective, is somewhere in the order of $50 to $60 billion. So how do we think about clean tech as it existed in the 2006-11 timeframe versus what it exists, what makes up Climatetech today?
I think, as I remember it, because I think as much as I joked about ChatGPT, the Cleantech 1.0 period was an era where there were some specialty venture capital firms funding technology going after generally energy-centric applications. And, we had started our energy efficiency company in 2005, and I had come out of venture capital. And I remember asking, the venture folks I know that were around Cleantech, whether they were even looking at building efficiency, and most of them weren't. It was still a newer subcategory, but generally energy centric. And so renewables were kind of the hot term in 2005, 6, 7. And there were firms that were specialized in all the technology and services around renewables. And there were also generalist firms that had typically one individual who kind of took it as a mission to go study the category. And so the things that were different back then was there was nowhere near the number of players or the amount of capital, and the category was generally energy centric. And today, as I mentioned before, every category has a relationship to Climatetech, and so we think of it as this. We think of it as energy as a category, the energy transition, but mobility and transportation are big categories that have huge opportunities. Food, obviously, and ag tech are very related to Climatetech and our sustainability. And industrial, we like industrial because manufacturing and the resources used for manufacturing are things that the world's way more aware of now. And so, those are the categories that we define, but, there's subcategories behind all of those. But back to what Cleantech was, is I think of it still as generally renewable oriented at that time. And the amount of capital, which became a challenge, it wasn't there to sustain a lot of companies that were built around growing into an expected adoption curve that it didn't materialize. And it wasn't just because of the financial collapse in 2008, 2009. It was that the adoption wasn't going to be fast enough necessarily to reward what would be generalists that would be funding the follow-on rounds of Cleantech 1.0 companies.
Yeah. It's almost as though back in the day, the money that was flowing into this was not very patient. It had some expectations about a quick turn, a quick exit, and didn't necessarily have the same time horizon to see some of these technologies, especially investing into renewables, to see that technology mature and the market mature to the point where the customer demand was there to support.
I think it's around adoption. I think patient capital is there, but ultimately, what wasn't there was adoption. So ultimately, you can't hide behind adoption not happening. And so that just affects everything. It affects how a company gets set up to build the technology, how fast they move, how fast they spend. And so I just think technology adoption wasn't there relative to venture markets. And by the way, it's way bigger than venture. I'm just obviously a venture brain, but there's service companies. We didn't have venture capital in Groom Energy. It was a service company. It was growing into energy services for the commercial industrial world. And, we were just spending at a cautious rate, but we weren't going to grow at a massive inflection. Part of it is a service company, and so it wasn't tech leverage. But we were in that category. It just wasn't hot and sexy necessarily.
Yeah. And there's an argument to be made that the ones who were able to come through that trough, and get to the point where the adoption was able to catch up with where they wanted it to be, saw their valuations rise. Obviously Tesla is the poster child for that. And today, or maybe a few months ago, before the Elon Musk Twitter takeover, Tesla was one of the top 5 market cap companies in the world, right? And certainly was able to showcase where clean tech capital could go given the right investment, the right adoption curve on the market.
Yeah, I still think they're a pretty amazing company in spite of the market cap correction.
All right, so let's fast forward to today, and now we've got Climatetech. All right, so we had Cleantech, we had this boom in it, we had this trough as things fell off, as the adoption just wasn't there, as technology was taking too long to really mature and come to market. We could make some arguments around some supply chain issues back in the time frame, especially around some of the renewable supply coming over from overseas. Today we're in a climate tech, I don't know if I want to use the word bubble, but a climate tech boom, let's say, much bigger in terms of the amount of capital that's flowing into this. Are we going down the same path that we went down with clean tech? We're still experiencing supply chain issues. We're still trying to focus on some of these adoption concerns. We're still investing in technology that could take a while to materialize. Jon, give me your perspective as to whether we're just seeing clean tech 2.0.
Yeah, clearly we don't think it's a bubble. We're calling it basically a sustainability super cycle. That you have so many tailwinds around the sector that's Climatetech, which is a superset of clean tech, that there will certainly be, investments in companies that don't mature and don't play out because of adoption or because of technology risk and technology development. But we believe that this is so fundamentally different than anything we've experienced before. And, I think from a practical standpoint, it doesn't mean that you can identify which categories will have the biggest winners at this particular moment. Obviously, when we make an investment, we're betting on a large TAM for its particular application for a company.
Total addressable market. Yep.
Yeah, and they're going to grow into a large addressable market with whatever they have at that particular moment that they think is a way to engage customers. But again, back to like the core things that are going on, you have capital flows that not only are ready to go fund this, but they believe. I mean, these funds have been raised with a belief set from limited partners that there is a lot of opportunity over the next 20 years, at least. So it's not a short-term view when you raise these kind of dollars. In addition to the policy part, I just think people have to remember that as much as there's not a political story here, it's just that what the government in the U.S. has done, the dollar amounts going in between the Inflation Reduction Act and the CHIPS Act, they're absolutely category creating. They are giving what generally might be considered hard technical challenges a much longer runway to develop into the market with incentives. And you think about even times in the clean tech period with solar, we ran this risk that incentives would disappear at any given year. And so you could watch a market and adoption and the economics of a market, like literally go to a wall, kind of like we're dealing with a budget for the federal government, and not know, and then magically have it appear. Well, you can't plan a business for a long cycle unless you think that these things are here for a long time. And it worked in solar for the U.S. And, the U.S. is also not necessarily the leader anymore on many of the technologies and certainly the adoption. So, we've already made a couple investments in Europe. I think it's a worldwide market. And the good news is worldwide adoption is happening. So that helps. We just think it's fundamentally different.
It's interesting that you bring up the IRA, you bring up the CHIPS Act, maybe talk about the bipartisan infrastructure legislation that passed 2 years ago. Did that fundamentally change how Activate thinks about some of these categories and where you're putting your dollars?
Yeah, we basically, if you're already long this market as a venture fund, it was not something you could speculate on happening. It was in many cases still a surprise when Manchin, basically complied and we were able to watch it go through. And so just if you think about speculating on that, that's not what venture firms are set up to basically take advantage of, long cycles. It doesn't mean you don't want fast adoption, but it's a bonus on so many fronts. And if you really think about it now, I guess the question is our investment strategy different post the act? Because we already have, funds raised. And you do try to understand which markets, like hydrogen, has huge lift. And so will we pay attention more to hydrogen? Of course. So, we see now the economics may change that otherwise might have been an impediment to adoption. And so we will look at certain categories more closely, but we were basically already studying pretty much every category to figure out where we saw opportunities and where we had an understanding and experience. So you just add it to a list of reasons you like certain markets.
Yeah, anecdotally, as I talk to others, it seems as though the overall market hasn't necessarily changed. There was still going to be capital flowing into the market. The risk factor is what changed when the IRA was passed, and the fact that now all of a sudden you were able to de-risk some projects that before you may not necessarily have taken a look at.
That's true.
Yeah. So what should we be looking out for? All right. It's not a foolproof futurescape of climate tech in terms of what's going to be successful, even in terms of whether this market is going to grow. I was reading just this morning about one of my more favorite topics around carbon offsets and just how crazy silly that market is in terms of trying to find good quality offsets that large commercial and industrial customers can use to manage their net zero aspirations. And an individual brought up to sit there and say, hey, look, this is just a pile of uncertainty that if we see something collapse around this, you could see a real market shakeup in terms of how we're thinking about greening and cleaning our economy. Are there certain signposts out there that you would be concerned about that we may be headed back down that path of clean tech 1.0, or do you think that we've got too much of a momentum today to the point where we may not necessarily need to worry about it?
Yeah, I'm biased towards the fact that the psychology of everyone who's in a position to influence it, the governments, corporate leaders, obviously employees and citizens, like the flywheel has started to spin. And I do think it's still bumpy, but if you look at all those things moving at once, I think the Inflation Reduction Act, as an example, is an outgrowth of that. But there's a lot more policy that has to come through. There are some basic things that still have to be addressed, and quite frankly, in a world where everyone's looking at everything, what rises to the top? And I just think if it's something around sustainability and climate tech, it has a better chance at being considered as being more important and being a priority, whatever it is. So I just think that's the exciting part, is it still can be bumpy, but when you change psychology of that mass of people, not just in one geography, and you add to it $1 trillion, and you add to it a bunch of really thoughtful, young, entrepreneurial brains that want to address what they can address and what they can have an impact on, I think it's a long cycle, and it's still going to have its bumps. But we're not thinking this is fleeting, and we obviously think it's different than it was 10 or 20 years ago.
Are you worried about the mass of capital flowing into the market? I mean, with all of that money flowing in, is there the risk that you're going to have bad capital chasing bad projects, chasing bad ideas? There could be an argument to be made that in Clean Tech 1.0, it came out of Silicon Valley and out of a traditional VC structure that people could understand and really look for some of those short-term exit strategies. And to your earlier point, without the ability to really take those technologies to a market that was ready to adopt them, there was this disconnect, right, between early VC and what renewable technology was ready to accomplish. Today, are we so gung-ho on the market to the point where we run the risk of throwing bad capital at this?
There's going to be lots of losses. That's the nature of venture capital. And quite frankly, if you know portfolio theory, you know that ultimately that's part of the risk reward that's expected. A venture capital appropriately expects higher returns. I'm just as stunned by how many private equity firms are funding the market as well. And generally, those types of companies don't have technical risk. They have projectability. They're growing into large markets. And in many cases, they have tech leverage. But a lot of it is around operational excellence. And, we look at, sub-markets like HVAC is a market that I particularly love. And, there's a staffing gap there around how you do that more efficiently. And there's plenty of private equity firms that have seen that opportunity 5 or 7 years ago That's Climatetech investing. How do you install and operate new infrastructure that's more efficient? But it's not venture capital. So I think the amount of capital is stunning across all asset classes. And so there will be losses, but they should be risk adjusted. They should have huge market opportunities that some of the best firms will have what we think are stunning returns relative to large market adoption with unique technology with teams at the right time.
Well, and the type of capital is changing too, right? We're seeing a number of new corporate investors getting into the market, whether, specifically in our energy transition space, right? National Grid has a venture capital firm based in Silicon Valley to focus on new and emerging climate technologies. A number of the different utilities have followed suit. And there's a number of different, everything from Saint-Gobain to General Motors to, any number of corporates who are putting money back behind some of these technologies. Do you see that as a good thing? Do you see that as a challenging aspect, or is there any difference between a corporate-backed venture versus one using private capital such as Activate?
Yeah, listen, the CVC or corporate venture capital trend is also part of this same phenomenon, and it is the case that many companies, that do this, they have an objective that isn't just financial, of course. They're trying to match strategy to where they might be investing. In some cases, to just see how something's developing that's in a related market. In some cases, it's core, and they anticipate that they will be a partner. But it's part of a positive trend. And I don't think it's clear yet how those will do from a financial perspective. But there are some companies that it's the perfect thing to do is to have a strategic partner early. If you're core to their sector and they have expertise and they can value your technology, if you're a tech-centric company, that can be really validating. It's normally later in the cycle than the earliest stage. So it's normally after the company has sort of got something commercial. But these are, as you mentioned, you just rattled off a bunch of names. There's a ton of them. I'd say the bigger corporate trend that is more surprising, but an indicator, is that I can remember in 2008-9, we were doing a carbon accounting research report because we were doing that kind of thought leadership around a couple of categories, just interviewing all the vendors and then talking to basically the corporate sustainability managers. And at that time, the corporate sustainability manager really didn't have a budget and certainly wasn't senior in the organization. And what we learned today through our companies, but also through our own primary research, is how stunningly that has shifted. That the sustainability leads inside those same corporates that have now a CVC or a corporate venture capital arm, the sustainability managers are empowered. They've got span of control, they've got influence, they've got budget, and they're setting strategy. That was definitely not the case in 2008, 9, 10. If you remember when Walmart did their supplier survey and they say want all their suppliers to track their carbon. I mean, these are indicators. It just took a long time, but I just think it's part of this overall flywheel that's spinning around psychology shift.
Yeah, we could go back just 5 years, and speaking from my own personal experience of working with large C&I commercial and industrial customers, in terms of trying to get them to purchase renewable energy in order to offset their supply. When you go and talk to a sustainability manager back in 2018, there were 14 other people that they would have to get sign-offs on before you actually could sign a renewable energy power purchase agreement or a virtual power purchase agreement. Today, the RE100, which is an organization that tracks large corporations that have committed to purchasing 100% of their electricity from renewable sources. The number of, I don't have the number directly in front of me, but I know that the overall energy usage of the corporations that have signed up and committed to that pledge now exceeds the total energy used in the UK, right? So it's amazing just how much momentum we have from the corporate side to create that demand. And I was going to ask my next question about, does that corporate demand and that corporate venture mold together to create a less risky environment for some of these technology startups to operate in the fact that they both have the capital to grow and they have the demand on the other side?
Yeah, I think it's only positive. I mean, if you look at any company making a strategy around what's core to them and allocating capital, I mean, ultimately the best reflection of that is how they organize and who they put in charge and how much capital they put behind it. So I think these are all signals. And each industry is different, right? I mean, automotive has a different threat with the EV world than the food world does, and the industrial world does. So, but if you just step back and look at the same thing you watched happen with what, I can laugh about PPAs and solar and trying to convince companies to do that. Yeah, that's table stakes now. And oh, by the way, the cost curves have come down on many of the things as well. So it's made it more financially attractive than it was 10 years ago. And so that's a benefit. And the other benefit is the employee base has changed. We know that in a world that's employee starved relative to our current economy, that the employees, or prospective employees, they want to do climate tech even inside of large companies. So there's enthusiasm around that. And they're not tech. They're not computer science engineers. They were doing this like we were in 2008, 9, 10. It's every discipline. And it is a multidisciplinary problem too. So that's also going to change how corporates make decisions. It's not going to be led tech wise. It's going to be led business wise.
Well, fascinating. Maybe that leads me into the question about what you see in the future for the next 5 to 10 years, right? As we start to shift into business decisions and this growth and this stability that the IRA gives us around tax incentives and around some of the policy making. Give me your perspective. Jon, you're sitting here, we're having this conversation again in 2033. What happened over the course of the last 10 years and what can we expect?
Wow. Unfair question, quite frankly. Obviously what I hope versus what I expect, and I think they're actually matched, is that every one of the categories that I rattled off earlier will have really large companies pursuing them. And today we're still dealing with a lot of early stage companies growing into any of the markets we talked about, whether it's food, mobility, industrial, energy, like any one of these categories. What I hope 10 years from now we see, which I think the beginnings of that is happening because of what we talked about, are Google's and Tesla's times 10 or 20, because that would be an indicator to the fact that we've done more relative to adjusting, both adapting and mitigating the climate impact on the world. Where those companies are is actually a tougher one for me to assess, because we have a U.S. bias, and I'm biased that this is not a U.S. phenomenon anymore. And, Activate, we've already done a couple investments in Europe, and I was part of EDF, and I learned many things that are just done so much more effectively inside of the European markets because they've been dealing with this opportunity for longer. Haven't necessarily had the venture capital, but certainly haven't had an entrepreneurial ecosystem, perhaps. But I'm not even bringing up China or India, but like each of these geographies themselves can produce very large companies. So I wonder about worldwide companies doing this versus those that are contained to the geographies where they are operating today, and whether you'll see that. That would make sense, because these opportunities will consolidate over time, whether it's the core stuff like batteries or hydrogen or solar or wind, the core energy side, or whether it's sustainable food, or whether it's world recycling of anything. There's just a couple of these things that there's no infrastructure and there's no large companies. So that's the best I can think of with an investment brain.
Well, what you're laying out there is great opportunity for entrepreneurs to step into this space, because there are no large companies there to already dominate. And you have the opportunity to come in, present a solution and a product that works, and really have an opportunity, 10 years from now to look back and be the next Tesla of the market. That's fascinating. It's a great perspective. If anything else, Jon, I'm getting the sense that you're very bullish on what the next 10 years are going to look like.
Yeah, listen, I have college age kids. I mean, everyone lives a little bit through the lens of their kids, who 10 years from now would be, 10 years into their career, or 5 or 7 years into their career. And you're trying to figure out, like, what can you say beyond, of course, pursue that which you think will be most fulfilling. But the coaching I think of is each of these markets will have a climate tech angle. And so find markets you like, and there'll be a climate tech company in those markets, because it's going to be pretty universal. We happen to have chosen energy, mobility, and industrial categories for what Activate does today. But quite frankly, what do you think we do? We look at everything outside of and the adjacencies. And so I think anyone entering the market that wants to do quote unquote Climatetech, you can still do it inside of a large company.
Yeah. What would you say to an entrepreneur coming to Activate, in terms of how they should be thinking about this particular opportunity in front of them? What should entrepreneurs be thinking about? Where's the white space that they should be investing their effort and time behind? What's the advice that you could give to companies out there that are looking at the first stages of the next opportunity?
So that's different generally than where I spend most of our day, with companies that already have an exec team built out, already have a product, already have revenues, and they have a belief set that they're going after a large enough market. So on the earlier stage entrepreneurs, I think a lot of this stuff that I end up, kind of talking through with them is actually not unique to Climatetech. It's still the base principles of how do you establish the beginnings of a business? How do you build trajectory? How do you spend relative to the opportunity at that particular moment? How do you do the operational part of any business? How do you hire and recruit and train people that will be the right stage for the company? So I actually don't think it's that different relative to the earlier stage entrepreneurs. It goes back to if someone's pursuing something, they have to have asked themselves why they have unique insight, and they would have answered the question for themselves. It's not my job, if I'm trying to coach them, to do anything more than just ask questions. But the questions are around the things I just mentioned.
Well, fantastic. Well, I appreciate you answering my questions today.
It's fun to talk through it. You're pressing on a good topic, obviously, which is, what does it look like 10 years from now? These are all things we all want to know. Quite frankly, in life, I don't think you want to know the answer. You want to know that there's a direction, but if you knew the answer, it'd be kind of boring. But I do think, we have we can speculate on what large category companies would be created, and we have our own list internally, but we're funding those companies.
Yeah. Well, what I'm taking away from this conversation, Jon, is Climatetech different than Cleantech 1.0, much broader, many more sectors that are getting invested within, whether it's agriculture or mobility or all the different ones that you've named off. Lots of good capital that's flowing into this. There's still risk associated with it, but the risk is around the operational and capability of these companies to scale, not necessarily that the market isn't there anymore, right? Which was really the concern back in Cleantech 1.0. And Jon Guerster, Activate Capital, you guys remain bullish for the next 10 years as to where we can go, backed by policy, backed by the legislation, backed by the market demand, whether it's on the corporate or the individual side. It sounds like a fun time to be in the space.
I think it is.
Excellent. Jon, thanks for joining us.
Yeah, my pleasure.